Okay, here we go. So today's session, I know the title says what the value of financial coaching for your business, but I figured we're going to get stuck into the main part of what I'm actually trying to say by talking about that, which is basically that if you're not trying to solve a strategic problem in your business by bringing financial coaching, then really there's not going to be a lot of value. So today's session is going through that strategic problem framework at a really, really high level. Good news is we're going to launch the first 2 modules of the course today, and then I'm hoping that there's another 2 modules that are going to be loaded up by the end of the week, which should be about 4 to 5 hours worth of work for you guys to do. So if anyone's ready to start binging on the course, then there's going to be enough for you to get going, and then we think the whole thing will be ready to go by the end of September, which is great. Guys, any questions as normal, let me know throughout the course of the webinar. I'll probably turn the webcam off now so that I can look at the chat box as well. So yeah, any questions at all, let me know. Just hit me up because I've got the chat box that I can look at too. All right, let's go. So remember, and I'll actually get you guys to chat while I'm doing this. Has anybody bought the book yet, read the book, had anything to do with the playing to win stuff at this stage? So just fire your messages at me okay, bought but not read, Marcus. Sarah, nope. Kim, nope. Okay, cool. There's enough of you that haven't done it, so I'll share that with you now. So basically, what we're using this strategy framework to help you guys make decisions around not just this component of your offer, but every other aspect of what you're bringing in your business to your clients. I've been in and around business strategy from a financial services point of view, probably for about 20 years, having worked inside the industry in one of the big corporates for such a long time. Strategy was sort of our bread and butter. The problem was that strategy really only sort of looked at the financial planning process. It didn't actually look at overarching business strategy. And for us that have got, beyond financial planning, we've got mortgage broking and accounting and other aspects. Strategy inside a financial services space was very linear. And the reality is, we don't work in a linear space anymore. We are competing within our own field, being planning or broking or accounting or coaching, across each other's fields, and we're actually competing for, I would argue, the spending dollar of all Aussies, because I still don't believe they think that a financial coach or a financial planner, where you've got to charge a fee, obviously, is a non-negotiable, which means you've got to win the business from them. So to have an integrated set of choices that's going to increase the chance of your success, you need a framework, and that's ultimately what this book does. Now, I found this about 4 years ago, where I was really struggling to articulate to myself, probably, and my team as well, the value of any of the possible solutions I was looking to bring to the business. What this book did was it gave me a really clear understanding of, one, why I was trying to make the types of decisions that I was, but two, and really importantly, it was really easy for me to articulate this to the team, to actually not just tell them what we were doing, but get them on board. So my first massive suggestion for anybody that hasn't done it yet, go and buy the book, whether it's the audio book, which I know Charlie has already got, and he's up to chapter 5. Hit me a comment in the comment box, Charlie. What do you think of chapters 1 to 4 so far? Good book? No good? If you say no good, I could be stuffed. But guys, seriously, 20 years, this is the best business strategy book I've ever read. And it's not just because it's a book. It's from guys who have a massive business, Procter and Gamble. You've got Roger Martin, who's the dean of Rotman School of Management, just ridiculously switched on individuals who've built a framework that helped Procter and Gamble move from an issue where the market was moving around them. And we're going to cover this off in the next module, so I'm not going to go into it in too much detail. In the next webinar, we're going to talk about pink goop, which is oil of Olay, and how Procter and Gamble found themselves in a very interesting situation where the average age of the people buying their core product had shifted from being in their 40s and 50s into their 20s and 30s, and their product wasn't ready to be able to move into that space. And for the first time in a really long time, these guys had no idea what to do. Now, Procter and Gamble are the sort of business where they either want to win or they don't bother. So they needed to make sure that the decisions they were making enabled them to get back from dropping from number 2, I think it was, in their positioning, back up to number 1 in terms of overall sales inside the beauty space. So it's a really, really, really good book, and it's going to be extremely valuable for you guys to not just help you with this bit, as I said, help you with other aspects as well. So how's it going to do that? The first thing that it does is it adds rigor to the decision-making process. And this is the bit that I loved. I don't know about you guys. Maybe, again, hit me in the chat box. I used to go off inside business. I used to go off gut instinct a lot. I didn't necessarily, I do a little bit of structure around stuff, but if I thought something looked good from a solution point of view, I'd jump to it. And I'd go, oh, yeah, you know what, I reckon this is going to be really good. And I think the problem with that model on its own is when you're right, you don't know why you're right. And when you're wrong, you don't know why you're wrong. And what this process is going to give you is a way to objectively assess the gut instinct to see whether or not it is right. And if you are going to go live with a solution, you've actually got all the bugs out of the way before you get to launch. And I'll show you the process we're going to use to do that. This is the next element. So you're going to be able to objectively assess potential solutions. And again, objectively is, having an objective way to assess something is really important, especially with the technology side here and the banking side of things. So technology, I know some of you are still in the selection mode or the selection process of working out which one you're going to go with. This is not going to be like the old world of where, again, financial planners in the room. Sorry for, I don't think I've got any of our mortgage broker only friends in here. Everyone in the room's a broker today, aren't they? Sorry, an advisor today, aren't they? I don't think anyone is broker only. I know Charlie's both. Marcus, you're starting on both, aren't you? Kim, John, Claudia, and Sarah, you guys are all planners. Yep. So this is not going to be like where you join a licensee and they say you can have any software you want as long as it's black and it's got an X in front of it. You're going to have a way to assess which version you want to run with, and we are partnering with 4. So objective assessment is really good, and it also forces you to have this mindset of these things are just potential solutions, but they're solutions to solving a problem, and we're going to have a look at that in the next module as well. It's going to, as I said, it's going to make it much easier for you to get buy-in from your team. So who works in a team that wants to share? We'll go audio now, so feel free to chuck your microphone on. Who's worked in a team before or works in a team currently now where there's been a decision that's been made and either you didn't understand why it was made that way because the person that made the decision just said this is what we're doing, or even better, if you're honest with yourself, where you've made a decision, said, right, this is the way that we're going forward, and it hasn't necessarily worked from the team. So just chuck yourself on audio now and we'll have a quick chat about that one. Yeah. And I reckon that insert will change the name from accountant to mortgage broker to any other sort of referral partner. This is a really good example of, I'd argue that there's 80% of external referral relationships don't work, and that only 20% actually do. And it's not because the end solutions aren't valuable for the clients, because financial planning done well is extremely valuable, accounting done well, legal done well, broking done well, it's all extremely valuable. But you're right, it's this inability to get everybody on the same page and agreeing that it's the right way to go about it, that's what tends to stop things from happening. So thanks, Kim. Anybody else got an example that they want to share, maybe with an internal decision? What about maybe a technology one that we've chosen to do, or a sales process or something like that? Anything internally where it hasn't worked? No, we're all good. Oh, Charlie, looks like are you going to jump? Are you going to give us an example, Charlie? I just picked on him because his phone was on. Oh, how about no? So Charlie's done everything right. Great. All right, I'll give you another one. The last piece of financial reporting software that we used, that, as I said, was we still use Xero now, right? And so we looked at using an external piece of technology called Spotlight, and they do dashboard reporting. And the problem with the Spotlight dashboard, well, the good stuff about Spotlight dashboard reporting is these reports were amazing. We could create them however they wanted, and they were about 10 pages long with about 4 reports on each page, and it was about 40 reports in total. And I just went ahead and did it because I thought what our clients wanted was more pretty graphs, because Xero is very ugly. Let's be honest. It's graphically, it's non-existent. You've got a single little cash flow in and out tool on the front screen, but that's pretty much it. You don't have anything else. And when all the other software that was coming out and all the planning stuff was moving towards these sort of graphical representations, I thought if we didn't have that our clients were going to start pushing back. And so I just went ahead and did it. And there was a method behind it, but I didn't have a really good way of explaining it. And then there was a lot of work to get things both initially built and also maintained. And I could see that the guys working with me didn't have the passion to do it at the same level and enthusiasm that I did. If we had had this process then, what we would have identified straight away was that we would have gone and stress tested it with our clients to see whether or not this was even something that they wanted, and we would have been able to do it in a very objective way using their reverse engineering process. To create a standard of proof that needs to be jumped and all that sort of stuff, which you'll see as you get later on through the book. But even if the clients had come back and said that they wanted to do it, what it would have enabled us to be able to do is get our team on board to see that this is going to be something that was valuable, was going to solve a problem in the business, and then they're more inclined to do it. So that's another benefit of using a framework for doing a problem solving. Sorry guys, I'm just jumping all over it. Too many slide transitions. Let's go forward. All right, and this is the ultimate extension of that, where historically a lot of us have had shiny toy syndrome. Now, again, the problem inside planning is because most of the toys that we get given under our dealer group banner aren't overly shiny. We tend to go looking for other shiny toys to supplement it. And I think financial coaching software is going to be a really good example of that. And again, I'm not having a go at any of our software providers, because they all do the job that they're being asked to do. There are going to be add-on partners. There are going to be new things that each of them build, which will promote and serve their own purpose, which is expanding upon their user base and the people actually using their software. But it doesn't always mean that it's going to be something that's valuable for you guys, and it doesn't mean that it needs to be something that you move into. And so not getting distracted by shiny toys as they come up is a really good exercise, a really good extension of this exercise. What the Procter & Gamble guys or the Playing to Win book suggests is once you've set your strategy, that you only review it every 3 months. Now, any ideas that come up during that period, you can quickly sort of filter to see whether or not it's something that might be useful, but you really try and get into this habit of formally only reviewing your decisions every 3 months. And unless the new tool makes the old tool redundant or it fixes a problem that the other one doesn't, then you don't change. So I'm really honest here. We haven't shifted away from Xero. Why? Because the other ones for us are great solutions, but we don't have a problem with the way that we run our process using our software now, because it works for us, because we've been doing it for 6 years. It's not perfect, but the old me and the old business without this sort of overarching strategy of what problem are we trying to solve would have been very easily persuaded to move to the programs that, yes, look a lot better. The user interface is done a lot better and the graphs that come out look a lot better. But for us, it's a shiny toy. And that's why we're not actually moving onto it. And that in no way, shape or form is saying that the software is no good and you have to stay with Xero, or if you're already on Xero, you can't move. What it's saying is have a process to move through by making, I suppose, consistent decisions. So let's have a look at their framework. And this is the process that is going to drive the remainder of the course. All right, and I'm just going to give you guys a default here, which I know we've touched on briefly before, especially for those that have done the full workshop. We want to start with defining the biggest strategic problem that we've got to right from the outset, which is why are we doing financial coaching in the first place? Now, over the last 4 years that I've been running the course, 95% have been targeting Gen X and Gen Y clients, and that's the reason why we're doing that. Is to basically say, look, we don't have many of them, and the ones that we do have don't like our traditional offer. So that's the biggest problem that we're actually trying to address. Now, extensions beyond that, and you're going to see this in the first activity that I'm going to get you to do, is other elements, those of us that are affected by insurance commissions. We're going to see a revenue drop on the 1st of January next year. The lenders are going to see a market tightening over the next 6 to 12 months. And so having ways to diversify revenue from an existing client base is hopefully going to solve that problem of the revenue or profit drop without having to increase the costs. Now, how are we going to do it though? And this is where our next part kicks in. And this bit is what you're going to develop out through the course. So the possibility range. Now there's four possibilities that we have, and there's only 3 that I've got up here, but there arguably is a 4th one. And guys, I'm going to put everybody onto a full chat now. So if anybody wants to talk, we can talk in here. So Kim, you're back on. If you want to mute yourself in the background, you can do that. Guys, I think there are 4 types of financial coaching offers, ranging from no touch through to high touch. Now, as you go through the course, what you're going to see is there's going to be components of your offer that is non-negotiable in my mind, which is you've got to get the numbers accurate. So you've got to accurately report the income, the expenses, the spending, and the savings. And so the physical activity of reconciling transactions, whether it's the system that does it on its own without any interaction from you, whether it's the system doing it off the back of you allowing it to evolve by creating rules, whether it's you manually doing it, whether it's the client doing it, it doesn't matter. Whoever hits the button on the transaction, if somebody spent $150 at Woolies, then it goes in as groceries, and you've got to get that right every single time. Because if you get that part of the process wrong, then you're not dealing with real numbers in real time, and the coaching element of your offer is going to be lessened from a value point of view because it's not going to be accurate. So we might have a really quick little debate about this one now, if anybody wants to put their two bobs worth in around their views of how accurate the information needs to be and whether or not you're comfortable with I suppose a few mistakes being made by the system automatically coding on your behalf. So I might just open that one up now, because that for me is probably the core part of your financial coaching offer, and then the rest of it I'm going to explain what's the difference between a medium touch, low touch, and high touch. So anybody got any questions about what do I actually mean by that? Does anybody not feel like it needs to be 100% accurate? Just really quickly. Yep. Okay. So on that, who else is thinking about? No, that's. Well, that would probably be. I'll explain the difference between a no, low to high touch, but think of it really simply that the more work you do on the client's behalf, the more value / cost that there's going to be, and the more work the client does, I suppose it moves further down the lower to lower touch end. It doesn't mean that it's not a valuable exercise for them in the end, but the coaching element would go down proportionately. It's an inverse relationship. The more the client does, the less the coach does, and therefore, in theory, it's harder to apply a higher value to it. Again, it's not saying that you have to have one or the other, and that's why I've got these three in here by default, and we're going to add the no touch one in now. Does anybody else have a view or a starting position, even those guys that haven't started yet, around whether or not you think you're going to do the reconciliations of the transactions, or you think the client is better off doing them? Yeah. Anybody else want to add their current thoughts or gut feel? And then I'll start to explain some stuff about how you choose. So I'll read out Sarah's comment. So we're going to have admin staff pull the reports, and the advisor will do any commentary around it. Okay, so the admin guys, Sarah, if I'm reading through that, the admin guys are going to be doing the reconciliation work, and the advisors are just going to basically look at the output as opposed to doing the input. Is that right? Yeah, okay. Look, the answer, this is the irony of this situation. The answer is all of these things can work, and all of them are going to be right in some way, shape, or form, because it's going to depend on the client. So the third, module number 2, is the value of financial coaching for your clients. And so what we're going to get you guys to do is actually build out client avatars and then look to retrofit or create your offer around each avatar type. So, and you're right, Marcus, that you do want these guys involved. And this is the thing that I suppose that we've spent a lot of time on in our practice over the last couple of years, because we've done so much of this stuff for so long. It's been about trying to get some gradual improvement. And what's the best way to do it? With the advent of technology, there's a real opportunity here for you to get a nice little, or not little, to find a point where the software does the right amount of work to remove the admin component off the table, but leaves, think of it like sifting, little gold nuggets. There's a lot of crap that's going to go through their transactions, and the client doesn't need to reconcile those. Arguably, the coach doesn't even need to reconcile that. Woolies is going to be supermarket. AGL and Energy Australia is going to be gas and electricity. There's so much stuff. Our theory is that about 80% of transactions should get automatically coded via the system itself. There's going to be probably about 10% of transactions that the coach will be able to pick up, or the reconciler, whoever it is, based on an understanding of the client and what they actually do. So an example of that would be someone that's got parents of school-age kids, right? And if you're the coach, or you're doing the reconciliations of that, and in conversations there's mentioned that little Billy or little Johnny does basketball or soccer, and you see a transaction come up for a local sporting club. Now, straight away, the coach, with understanding of the client, will be able to pick that up and go, okay, well, that's sports, and we know that. Or the coach is talking to the client and they've been mentioning that they're going to go and join a gym, and then you see Fitness First or Virgin Active or something come up, and you know how to put that through. And that's probably going to be about 10% of your transactions. You might know when the client's birthday is coming up, and because of that, you'll see a whole bunch that are going to go through that look like presents. But there's going to be this growing, there's going to be this number of probably about 10% of transactions where you're never going to know what they are unless you actually get the client to interact. And straight off the top, there's two that you're never going to know. And one is anytime a client pays for something using PayPal. Because PayPal just pulls through with the merchant code, PayPal, and then the long string of numerical text for the reference. You have no idea what they've actually spent that money on. Now, the system, if you automatically create a rule, or you don't override the rule that sits underneath My Prosperity or Moneysoft, it might code PayPal to entertainment when they could be. I've got clients that do Woolies online shopping using their PayPal account. Yeah. So guys, what we want you to do through this, and we're going to spend a lot more time in the budgeting module on this, is having a methodology that says, where is the value actually being added? Then what we're going to do is we're going to go and test conditions for that to be true. So this is what's going to happen throughout the course. And this is this is the Playing to Win module. The Playing to Win framework. They'll basically say, guys, use your gut instinct at this level. Let's go and create 3 or 4 different offers, which could have a range of different things in terms of FaceTime, video time, virtual time, number of reports, how many meetings they get, who does the work, all of that stuff, and then go and test to make sure that would be true. So one of the tests would be you'd actually ask your clients, would you see this as a value add or a value detractor if we got you to do this? So there's going to be a lot more work through that. By the time you get to the end of the course, and hopefully for some of you that'll be somewhere at the end of September, for some of you it might be October, depending on how long it takes you to get through. We would love you to launch a pilot group that you run for 3 to 4 months, and hopefully everyone's opening their doors for their full-blown offer by no later than January next year, or January, February next year, to take in the opportunity of New Year's resolutions and when everyone's spent too much money over Christmas and they want to actually get a handle on stuff. For that to happen during your pilot group, you're using your pilot group to do 2 things. One, get live feedback on how the process itself works. But 2, also get feedback around the value of the components of the offer. So why I say 3 months is most of you will get to a point where you're running a quarterly progress meeting, which is where you're looking at 3 months worth of data and you're sitting down and you're showing the clients how they went over the previous 3 months compared to month versus month, plus budget versus actual, maybe also looking at adding in a peer group comparison. And I'll just explain that when we get to the budgeting part. But what you're also looking for is the other interactions. Guys, how did you find our meetings? Was the way that we were framing up the meeting, did that make sense to you? The format of the meeting, did you like that? Was it too short, too long, just right? Did you like having meetings more face-to-face versus virtual versus video? If we are sending you videos, what type of feedback would you say is okay to get by video versus you only want to get it face-to-face? The price, referrals. If you were to refer other people onto us, what would be a process that you would find suitable for you? Do you want a reward system? So there's so much stuff that you can build into your pilot. Now, by the time you get to that stage, I've already got like a list of 20 things that would be in here's how you define success of your pilot. But over the course of the program, what I want you also thinking through is what other stuff can we bring? What other ways can I test this out? And so who was it? I think Kim, you were saying about the accounting partners not referring financial planning. Those guys have got to get dragged into the pilot group if you're thinking of getting referrals from this. For those of you that have got mortgage brokers, they're getting dragged into this pilot process as well. So guys, this is the process we're going to use, because by the end of it, you're going to be in a position where you have a strategy that you've chosen that is most likely to succeed. It's not a 100% guarantee of success, but what it's going to do is it's going to narrow the gap down from this could be really, really good or this could be an absolute epic failure into it should work really, really well, because we've actually identified what they want at the start based on client avatars, which we're going to do in the next module. We're going to test this as we go. So there'll be elements, you'll be going back to your licensee and getting feedback from them. You'll be looking at your banking partners and making sure that the way you construct out your banking model is going to work with the partners that you've got. You might do some really high level testing of pricing to see whether or not the market's going to pay for it. And then in your formal pilot group, when you design, pick 5 to 10 friendlies to run through it with you, you'll get live feedback as you go, so that by the time you actually launch, it's almost a fait accompli that it's going to work. Guys, does that make sense for why we're using this framework? Because if everybody does it the same way, then it's not just me coaching you, it's us coaching each other, and we're all working together using the exact same process. Then it doesn't matter which licensee we're in, it doesn't matter which aggregator we're in and which bloody process they want us to use for making decisions. We're all doing it the same way, and then that way we can actually help each other out through this as well. I know I'm over time by a bit today, but I wanted to spend a little bit more, and so I do thank you guys for hanging on. Any questions at this stage about this part of the process? No, all good. All right, guys, I'm going to put together the next half a dozen coaching calls today and email that out. I'm going to load this one up onto the system. By 4 o'clock this afternoon, the first 2 modules will actually be live, so you'll be able to go into the course and start going through some stuff. By the end of this week, there's going to be another 2 modules up there, which is exciting to have this stuff finally starting to come to life. As normal, any questions, hit us up in the Facey group is the best way to do it. You guys are sort of moving through this as a crew now together, so don't just think that this is one-way traffic. If you want to ask each other for help and questions, then feel free. Guys, thanks so much for joining me for today's call, and I'll talk to you soon. Bye.